Look at this graph. As you can see, the mortgage interest rate since 2002 have been going up. You've had some ups and downs, and we've had some major declines in rates at one time where rates got even below the lowest to like sub 4%. I actually got a mortgage on my personal house for under 3%. Now, we've steadily seen rates go up and increase the last couple of years to where now we're sitting at pretty high interest rates. So one of the questions that I get across the board right now, with rates being the highest they've been in a really, really long time, did I miss the window, or is now a good time to invest in real estate? And I'm telling you this from a standpoint of managing over 300 million in real estate, selling over 7,000 homes, and being in business for over 20 plus years. I've seen markets go up and down. Here's what I want to tell you before we even get into any of the facts. Time in the market is better than timing the market. When you can be in real estate for long periods of time, you're going to win. But let me give you some actual pointers of why I think in 2025, it's still a good time to invest in real estate. So when it comes to real estate, one of the reasons why I think it makes a ton of sense to invest in real estate, even in a high interest rate environment, all the benefits of owning real estate, which we're going to go into, but here's the other thing. In a higher interest rate environment, one of the things that you got to think about is the market is not as crowded for investors to buy houses. So you're not competing and overpaying. What I mean by this is you can get into a property today, right? And you can refinance it later, but you're not buying it in a market where there's 100 other people competing on the same property. Also, one of the main benefits of buying real estate is long-term appreciation. So what is long-term appreciation? I want you to think about something. This is the best example I can give you. Think about the house that you grew up in as a kid, right? Go back to, the year you lived in it when you were a kid, the last year you lived in it. What was that house worth then? What is that house worth today? That's long-term appreciation in real estate. Over time, real estate, good market, bad market, steadily trends up and goes up in value. That's long-term appreciation. So if you can get a property today, even in a high interest rate environment that covers the debt service, meaning you can get enough rent to cover the expenses on the property, it's gonna appreciate in value over time. So that's one of the great reasons why you wanna buy and invest in real estate, and why so many people invest in real estate is because over time, good market, bad market, it goes up. If you play the game for the long haul, you're gonna be all right. Another great benefit when it comes to investing in real estate is the tax benefits. So there's all kinds of tax benefits that you get. Appreciate or depreciation, accelerated appreciation, things like cost segregations. There's all kinds of things when it comes to real estate. By owning real estate and owning real estate from a cost perspective, it can be an actual cost shelter. And if you're a real estate professional like me, there's actually some extra things that the IRS allows where it gives you things like accelerated depreciation through cost segs, where you can get a ton of write-offs against your taxes. That's why a lot of wealthy people buy properties and use real estate as a hedge against taxes. Another reason why, especially in the inflationary times that we're in, that you would buy real estate is the hedge against inflation. See, a lot of people think keeping your money in the bank and saving your money is what you should do, when every single day, the value of the dollar that you earned has gone down. Just think about what your grocery bills are right now, right? Versus a couple of years ago. That's inflation in real time. So think about this. If you buy real estate, as the dollar goes down, inflation continues to go up, the property continues to increase in value. So it hedges your money against inflation. I can tell you any day of the week, I'd rather have my liquid cash in a property that's appreciating in value, giving me income, than sitting in the bank losing money. Wealthy people know one thing about money. It doesn't make you money sitting in the bank. So this is another great reason why you want to invest in real estate. Also, a good reason to invest in real estate is it creates income. So if you buy a rental property, same example, right, today, and it covers the debt service. So you get enough rent to cover the debt service, to cover the expenses on the property. What happens is your rent typically goes up, right? So the cash flow on the property will go up. Now here's the other thing. You wait for rates to go down and you refinance the property. I can't tell you how many times in my career where rates were higher or high, I bought the property, it cash flowed that day when I bought it, and then rates went down and I refinanced it so my income went up and then the rent went up. So it's a great situation where rates go down, right? You can refinance, and your rent income continues to go up. So this continues to pay you, and it creates an asset that creates cash flow. That's another great reason why you want to invest in real estate. Now, there are some cons to buying real estate in a higher interest rate environment. Number one, obviously the cost. Higher interest rate, it's going to cost you more for the money. It's going to cost you more for borrowing the money. It's just a higher cost in general. So you have to weigh that as an option because the cost is going to be more than a lower rate environment. Now, however, if you evaluate the property from a standpoint of it will cover all of your expenses, then that's how you know to make a smart decision. You never want to buy a property that doesn't cash flow. So although your costs are going to be higher, you can mitigate that if the property does cash flow. However, in a high interest rate environment, I mean, that's what it is. It's gonna cost you more. The other thing in a higher interest rate environment, I know this sounds kind of counterintuitive, but a lot of banks, their margins are actually smaller in a higher interest rate environment because it costs them more to borrow, right? So what does this mean for you? Well, in a higher interest rate environment, a lot of times the banks get a little bit tighter because they're a little bit more scared to loan because the margin for error is a little bit shorter because the cost of money is a little bit higher. So when you are in a higher interest rate environment, a lot of times banks are a lot tighter on lending standards than when money's a little bit cheaper. Now, this is not always the case, but a lot of times when, like today, inflation is high, the economy's kind of wobbly, the cost of money is higher, banks are just a little bit more cautious. So it is a reality that it can be a little bit harder to borrow in this environment. So even though those are pros and cons when it comes to this, to overcome the cons, here's a couple of things that you can do, which I actually think this makes it better if you're out there investing. If you're trying to buy properties in 2025 in a higher interest rate environment, there's a chance that you can negotiate and get a better deal. With the cost of money being higher, it is more difficult for people to get financing. It's more difficult for people to buy properties. Your competition is going to be less, which means you have the ability to negotiate a better deal, right? And if the property covers itself and it services itself, you're going to be good in the long term. But you have the opportunity in a softer market to negotiate a better deal. Another thing that you could do is there's something out there called a DSCR loan, and that's short for a debt service coverage ratio loan. A DSCR loan that's out there is based solely on the asset, and you don't have to go through the same things that you go through when you're borrowing from a bank, and typically they'll give you a 30-year mortgage amortization, which means it can help you from a cash flow standpoint. And the DSCR loans that are out there a lot of time have very favorable terms and very favorable interest rates. So think about it. You can negotiate a good deal and you have this great debt tool to get you in the property over a 30-year AM that can help you get a better deal and help the property cash flow. Myself personally, I have done hundreds and hundreds of DSCR loans. I love the product. When I first became a real estate investor and an agent, this product didn't even exist. So it's great that the DSCR out there is a really, really good tool. Also, if you're in a situation where because of the higher interest rate environment, it's harder for you to figure this out financially, if you got a good nose for finding deals, or if you can find deals, you can partner up with somebody because good deals always find money. So don't get discouraged or think that it's not a good time to invest, because I've made the most money personally in my life buying in quote unquote soft and bad markets. Because when you buy in markets when no one else is buying, you're gonna win, because eventually that turns around and the real estate always appreciates. Now, if all of this sounds too complicated to you, but you still want to invest in real estate, you may or may not know this. I've run several real estate funds where you can invest with us passively, and we can put your money to work in real estate and you just get mailbox money and you don't have anything to worry about when it comes to the investment. We just handle it for you. I do believe that everyone watching this, because I think real estate is a path to freedom, should explore investing in real estate themselves. But if you got other things that you're good at, you're making money other places, we can invest your money for you and you can do it through one of our funds and you have nothing to worry about. All right, so in conclusion, right, real estate is a long-term play. And just because rates are higher doesn't mean you should be discouraged or in investing or it's a bad time to invest. In fact, I think the opposite. I think you can get a better deal. You can find a debt service product that makes it work for you. I think you can negotiate a better deal. Your rent's gonna go up, the property's gonna appreciate, and you bought in a softer market. So you probably got a better deal than if you're in an appreciating market. So I would not get discouraged if you're out there thinking about investing in real estate next year, because as I said in the beginning of the video, time in the market is better than timing the market. If you're in real estate for the long game, it's gonna appreciate, it's an asset that's gonna cash flow, and you're gonna get all the major benefits. So if you'd like to learn more on this subject, click the link below to watch the next video.